Okay, today I will be explaining what a fair value gap is. A simple, easy money printer. That's what it is. But no, let's get into it. So, boom. Here we have a chart of a stock called Coinbase. And we're looking for fair value gaps. That is the word of the day. That's the topic of the day. And I will be here to tell you all about it. A fair value gap is basically when a stock makes a huge pull in a certain direction, whether it goes up or whether it goes down. It has to make a big movement up or a big movement down. It has to create three large candles of movement in the same direction, basically. And this strategy is strictly trading price action. It's only a few things you need to know. Actually, before I get into that, I'm just gonna. So I said what I said about it needs to make three candles going down. So let's say uh market opens and so wait. Actually, before I get into that, this right here, there's no fair value gaps here. You know why? Because it's kind of trading choppy. It's not really picking a direction. It's up and down, but now it's not a clear direction. Here is where we see a nice clear direction. This would be a perfect example of a fair value gap. Perfect. So what you would do is you find where does the fair value gap break structure. It's right here. These three big candles here. Kind of sideways and boom, it makes its move and it breaks. Let me show you this on a bigger time frame. It breaks this support line here, and overall you can see the stock is downtrending. It's been downtrending. Let me show you guys the 1 hour. You see, it's been downtrending since here. So boom, let's go back to our fair value gap. Sorry, I know my chart is a little messy, but yeah, back to our fair value gap. So we know the overall trend is a downtrend. So we see a fair value gap in a downtrend, is a pretty valid fair value gap to trade. So we're looking for three things. We want to see it create a fair value gap, which is a big move to the downside with three strong candles. After it makes a third strong candle, I want to see it continue down a little bit in order for it to be valid. And it has to break structure. All my requirements are met right here. So let me draw it for you guys. Real easy. Boom. I get my fair value gap. I draw it. Now, all a fair value gap is, well, a fair value gap to the downside. What you do is you start your rectangle at the bottom of the first candle to the top of the third candle. And then you draw right there. So this area right here is your fair value gap. So look, 1, 2, 3. These are my three candles that I'm using for the fair value gap. All right. The bottom of this first candle to the top of this third candle where it wicks right here. 1, 2, 3. Those are my three candles. So all this space right here, there's no buyers. There's nothing but sellers here. So all we want it to do is we make our fair value gap, and then we want to see the price come down a little more, which it did. It came all the way down here. So this confirms that this is a strong fair value gap, and price, of course, is going to retrace, but overall, it's going to keep going down. And we're going to buy puts or buy options that it'll go down when it retraces back up into this area. So it came down and then it came up. And then once it got to about here on this candle, we would have bought puts right here. It hit our fair value gap. You would have bought puts. Anytime it hit this area, buy.